Hello, and welcome to the Nursing Economics podcast series. This series provides extended content relating to articles published in the journal, such as interviews and roundtable discussions. Before we get started, we have a special offer for our listeners. You can save 50% off 1- and 2-year subscriptions to Nursing Economics. Simply visit nursingeconomics.net, click subscribe, and enter promo code NECSAVE50 to take advantage of this special discount. The Chief Nurse Executive is a key leader when an organization sets out to develop or transform its business model. In today's post-pandemic world, meaningful participation demands an evolved financial skill set to accommodate an ever-changing healthcare landscape. In this episode, Nursing Economics Editorial Board member Dr. Therese Fitzpatrick talks with financial strategist Dan Majka, Managing Director and Practice Leader for Financial Planning at Kaufman Hall & Associates. Mr. Majka discusses factors currently altering the cost structure of healthcare organizations, various strategies organizations can use to move forward, including benefits of organizational partnerships, and frameworks to successfully manage system performance and financial planning. We are pleased to present this important conversation between Dr. Fitzpatrick and Mr. Majka.
Hello, and welcome to the Nursing Economics podcast. My name is Therese Fitzpatrick, and I am on the editorial board of this esteemed journal and have the privilege of writing the corner office column. We hope to bring to you in all of our podcasts, and today is no exception, some really thoughtful insights that will be helpful to nursing leaders, particularly around advancing their financial acumen. Before I introduce our speaker today, I'd like to present the problem that we hope to provide some insight around. The past several years have created a new reality for health systems. The pandemic impacted our volumes and, importantly, locations of care. Additionally, our workforce has been stretched to capacity, leading to retirements, turnover, and serious consideration around the meaningfulness of work. These workforce shortages, supply chain challenges, and inflationary pressures have put many systems on an unsustainable path forward. Using our traditional approach to cost cutting is not relevant in this environment and will not lead to fundamental transformation of the business model, which is a requirement to thrive in the new normal. As organizations consider the evolution of their business model, it is critically important that the chief nurse executive be at the table. Their perspectives of the health needs of the community, understanding of clinical processes, and their interdisciplinary relationships are critical components of these strategic conversations. However, an evolved repertoire of financial skills is required for meaningful participation. While our traditional skill set, which includes creating operating and capital budgets, productivity reporting, and basic financial analysis are important, knowledge around treasury, partnerships, mergers, and bond covenant requirements are the new competencies. To answer many of these questions, I would like to introduce Dan Majka. Dan is a managing director at Kaufman Hall and leads the firm's financial planning practice. He consults on a national basis for a broad range of healthcare organizations. His area of expertise includes integrated strategic and financial planning, capital allocation, mergers, acquisitions, and partnerships. Dan is a frequently sought out speaker for various industry groups such as HFMA and ACHE. His topics include, among others, financial planning and capital allocation for healthcare organizations. Dan holds an MBA and an MHA from the Pennsylvania State University. Dan, welcome to our podcast. And I would like to start by asking, in your role as a financial strategist and thought leader, you speak to the importance of portfolio analysis and business line optimization. These are really important areas that nurse executives become very skilled in analysis and in having these conversations and being a seat around that table where these conversations are happening. You have made the case that current financial headwinds have fundamentally altered the underlying cost structure for our health systems. Can you, for a minute, describe for us the factors that have disrupted operational and financial performance? And again, welcome.
Thanks, Therese. I really appreciate you having me with you today on the podcast. And this is something that I'm absolutely excited to talk to your group about. It's really been a perfect storm of financial pressures the past few years, both on the income statement side and the balance sheet of the healthcare industry. It's really been impacted from almost every direction you can imagine over the past 3 or 4 years. And you can pretty much work from top to bottom through a financial statement and see significant shocks all along the way. On the income statement side, we've seen top line pressures in the form of things like reduced utilization, whether it be from community use rate change and shifts in utilization patterns to increased competition from non-traditional providers. You see consumerism and price transparency impacting demand for services, as well as just reimbursement from government programs and commercial payers. And then the story just continues in the expense base with unit labor costs and increased dependence on agency staffing and supply chain disruptions and pharmaceuticals inflation and the like, most of which you named in your introduction. And what we're seeing is, at the end of the day, legacy organizations are often finding themselves with an outdated and an outsized fixed cost structure relative to what their new business model will be going forward. And when you add to it the situation that we're seeing on the balance sheet, it doesn't help at all. Obviously, with cost of capital rising as a result of tightened monetary policy out of the Federal Reserve, volatile and suppressed investment incomes as markets react to inflation and recession fears, we're just seeing these pressures top to bottom across the income statement and balance sheet in a really significant way.
Thank you. And that is a really thoughtful way for us to begin to understand the environment in which we're working. So you and I in conversations have talked about your perspective around the fact that health systems really depend on what you call internal interdependent companies to support their resilience. And this includes funding strategic initiatives as well. Can you explain for us your thinking around this notion of the operating company, the finance company, and the investment company?
Absolutely. This is a construct that was developed and can be explained much more thoroughly by my partner, Eric Jordahl. But I find it very helpful when we're thinking about the current position of an organization, the strategies we need to proceed with moving forward, and the risks that need to be managed along the way. And so first we have the operating company, and this is the portion of your business that focuses on clinical services, derives its revenue from patient care and the cost necessary to support it, translate into profitability. Think of this sort of as the core function of the healthcare enterprise. Second, we have the finance company, and this is the piece of the business that focuses on external capital formation, like things like liquidity and credit management. I like to think of this as essentially an outreach function that relates to the external markets and maintains relationships with investors and creditors to ensure that the healthcare enterprise has access to capital. And then finally, we have the investment company, and this is the piece of the enterprise that's focusing on generating returns from invested assets. And these come to us in the form of non-operating revenues, below the line or investment gains. And so when you think about these three companies together, you can already relate back to the opening in terms of the pressures that we're seeing that are basically falling across all three dimensions. And so in an ideal situation, all the components are making a positive contribution to the financial health. And if there is a disruption in one company, then the system can rely on other companies, one or both of these companies, to help mitigate the impact. And this is what we saw early in the COVID-19 pandemic. We had organizations that were entering the situation with relatively strong balance sheets. They were further bolstered by government relief funds. The stock market was performing well and investment income returns were there. And so there really was this sort of offsetting, mitigating force in the investment company of the enterprise to offset the operating challenges as health systems were learning how to respond to the pandemic. And then what we saw is that the situation changed very significantly towards the back half of the pandemic, because then you started to see the balance sheet pressures come in. And so now you've got all of the companies, if you will, of the enterprise, the operating, the finance, and the investment company, all witnessing these pressures simultaneously. And when performance is disrupted across the board, you ended up in this situation that was the perfect storm that we described earlier. And in summary, that was operating performance was down, and there wasn't a clear path back to pre-pandemic levels of performance. External capital was tight and still is, more expensive than it has been relatively over recent history, which puts more direct and indirect pressure on operations to fund capital investment. And returns on invested assets were, uncertain at best, right? A lot of volatility there. And so that's the sort of dynamic that was at play. It was the forces we talked about in terms of general terms, and then the underlying impact of, well, all three dimensions of our enterprise were facing headwinds, and where do we go from here?
So that's really interesting, and it suggests something that we addressed earlier in our conversation here around the fact that what you are describing is very unique, that we typically see one of these companies at least being able to come in and sort of save the organization, if you will. That suggests that the traditional ways that we have come to expense management may not work in this new environment. Would you agree with that? And can you offer an opinion?
Absolutely, Therese. When I think about traditional improvement efforts, both on the cost and the revenue side, I'm sort of the opinion that a lot of organizations have already gone after and harvested the low-hanging fruit. And even if they haven't, to me, the traditional approaches to cost management, they'll do very little to change what the underlying cause of expense increases are that we're seeing today, right? So we can play with our unit cost, but does that really do anything to change the fact that, we're subject to supply chain pressures, or that the staffing models are changing and a sort of shift to agency nursing? That's very little we can do to that effect with traditional unit cost-based approaches to improvement. And I think the same is true on the revenue side. There are tons of great revenue growth strategies out there, but the reality of it is that those are going to take time to grow into and generate any type of impact at the necessary scale that we're faced with today. So this idea of, incremental growth out of our current situation, it's really hard to sort of imagine that that's going to save the day when we're talking about financial positions that have been impacted so significantly. And so our point of view is that health systems have to be looking at a fundamental transformation in their business models to find their way back to sustainability. And when we talk about that transformation, what we're talking about are a set of goals around creating a health system that's focused on business and services that it's best positioned to provide, looking at services and providing those in markets where the organization has and can continue to build, a significant relevance for consumers, employers, and payers. We want to be a player, if you will. And finally, be open to the notion that we might need to supplement our capabilities across the healthcare continuum through partnerships to ensure that we're fulfilling mission and community needs appropriately with the right sort of level of resource consumption for the organization. And so I think you can see the need, if you will, or you can talk about all the impacts we discussed earlier around cost pressures, revenue pressures, balance sheet challenges. There's really no better way to articulate that than looking at the financial plan of an organization. And if you sort of treat that financial plan as the backbone of truth and the backbone upon which you evaluate options going forward, you'll see that, when you quantify your current performance, it very likely is going to define a gap relative to what level of cash flow do we need to be generating to have strategic and financial flexibility going forward. And so when we think about this transformation roadmap, if you will, the financial plan is an awesome call to action to sort of quantify the problem. And then it's a great tool upon which to test solutions against and really understand, are we going to be able to affect our future curve in a way that's going to result in that long-term strategic and financial flexibility?
Thank you. You speak to the importance of looking at the portfolio of services that the organization provides. And these are really difficult conversations because, as we know, sometimes we think we need to provide everything to everyone. That may not be financially or operationally sustainable in this new future. This seems to me to be a very critical place for a chief nurse executive who understands, as you address the market, understands the healthcare needs of the community, and has a tremendous breadth and depth of operational understanding of those various service lines. So can you speak a little bit about the importance of a portfolio analysis and sort of at a high level, how an organization may go about that really critical exercise?
Yes, Therese, and you hit the nail on the head. This is often a very, very difficult task for organizations. And it's, nothing like a process that starts with one of the most difficult steps, right? There's no easing into this. You have to get into it and be honest with the organization. And it's critical that you have this level playing field of knowledge across the organization, from governance through senior leadership, from administrative to clinical, across all dimensions of the organization. It's just so important to establish this portfolio assessment as the point of departure. The goal with portfolio assessment is to ensure that over the long term, the efforts and resources of the organization are being concentrated in the areas that will create long-term relevance and sustainability, right? So we want to make sure that we're leaning in where we need to lean in, essentially, all the while being true to our mission of the organization and meeting the needs of the community. And as you've pointed out, a thorough and rigorous portfolio assessment will very likely result in decisions that are going to be pretty difficult to make, right? So we're going to be thinking about, some decisions will be fun and easy. Where do we double down, right? But some questions get a little bit tougher. Where do we exit? Or where do we launch? And do we have the capabilities to do that appropriately? And so you get sort of that first layer of observations, where are we going to focus? But then it starts leading into other conversations around, well, what's the right way to optimize our physical footprint and our real estate holdings to meet this optimal service distribution? Or another consideration that could come out of this is, where are we going to be honest with ourselves and realize either A, we don't have the resources or the capabilities to be in a certain service area or service function, or where are there areas where we might be really good at it, but you know what, it's not core to our mission. And maybe this is an opportunity to monetize and exit from a certain component in order to create capital capacity to focus elsewhere in the organization. So this really does get sort of at the fundamental, what are we going to be, where are we going to do it, and how are we going to execute against it set of questions. And so as we think about health systems, as they've reacted to these various industry incentives and market opportunities and community needs, many organizations have sort of evolved into this conglomerate of yeses, is basically what I always like to tell people. It's just, organizations are really good at saying yes when the justification is there, but maybe not so quick to sort of challenge that and have the fortitude to say no or exit when we need to. So a lot of organizations have grown, and the risk of doing that is that there's this risk that you can lose focus by doing too much. You could have missed opportunities to exit lines of business, as I talked about earlier, where you might be able to sort of better deploy that capital and that resource for something else. You've got missed opportunities because programs are consuming so much of your resources that you don't have enough to sort of reinvest in the strong performing sides of the organization. And so what we really believe wholeheartedly is that the planning process, the financial plan that we talked about earlier, really needs to be informed by this portfolio assessment to start understanding the what and the where and the how are we going to deliver services to our community that are aligned with our mission, but also protect the long-term sustainability.
That's a really helpful explanation. And, to the point that you make, one of the reasons why these are often very difficult conversations is that it may be around services like obstetrics or behavioral health, where there clearly may be a community need for this service, but we may not, to your point, be the best person, the best organization to be providing that service in its current iteration. Sort of opening up the conversation to, and you referred to this earlier, is there an opportunity to partner? And that leads to a whole sort of additional conversation. We'll have to have you back around how to sort of tee up those conversations and look at the financial strategy. What is the benefit to the community, to the organization, for looking for partners oftentimes to help with this?
Yeah, it's interesting when we talk about partnership. That landscape has changed significantly over my career. I've been doing this for about 25 years at this point, and that the partnership landscape has evolved. And that's in everything from why organizations seek partners to the types of partners they seek, and specifically around how they structure partnerships to achieve various benefits of scope and scale of integration. But in really simple terms, I put it in sort of these two categories, when in reality it's a spectrum. But let's think about it in these two categories. First, you've got what I would call the big P partnerships. These are the traditional fully integrated partnerships that result in a single enterprise. Very often it's the merger of two to create a new, or it could be the acquisition of one to join another. But in recent years, we've seen a lot of acceleration in this type of integration, big P partnerships. And they've been largely strategic in nature, and they're being driven by a whole range of factors, not the least of which is financial performance, but very often it's around capabilities and access to new markets and other sort of objectives. And what I think is really interesting about these big P partnerships and the dynamic that we see is that, you've heard this old adage, no one wants to lend you money when you don't really need it, right? And the same is sort of true in these highly integrated partnerships. The universe of potential partners is significantly better for organizations that are in a stronger position to begin with. To say it differently, I used to think of these big P fully integrated partnerships as a scenario where one organization was saving another from death's doorstep. And that's really not what we're seeing anymore. What we're seeing is most of these big P partnerships are between two independently viable organizations that are finding a way to make 1 + 1 = 3. So it really is fascinating. The other end of the spectrum, are what we would consider sort of the little P partnerships. These would be selective partnerships around specific businesses and service lines or shared, interests, whatever they might be from a delivery standpoint. And these take a lot of form. They could be joint ventures, contractual agreements, et cetera. And these little P partnerships are really effective at helping prevent or plug gaps in services or add new services to a health system that, may be necessary as part of the transformation journey. And they can sort of, manifest themselves in a number of ways. Sometimes it's the divestiture of an underperforming asset to a specialized provider. Think of long-term care as an example, where we might contract for that service back then. And so put the operations into the expert's hands, but still have access to the service from a community and a business model standpoint. They can also be structured as joint ventures, as we mentioned earlier. And these benefits, they really are numerous when we think about these little P partnerships, whether it be including sort of, the flexibility to adapt, speed to execution, access to capabilities and capital, and quite frankly, often a better patient experience as well when we think about sort of still being able to offer a full continuum of services to the community, having those who sort of know the business and are expert at running in it, control of those specific operations, but having them coordinated across the delivery area through these series of partnerships. So it really is a fascinating space right now. And it's one that when we think about transformation and going back to that portfolio assessment question, this has to be an area that we're thinking about. I often like to tell people that partnership in and of itself may not be the strategy, but partnership is a very powerful tool or vehicle to use in order to achieve your transformation goals.
Thank you. Really interesting and much to think about. As we conclude our conversation today, can you offer 2 or 3 thoughts around, you've described a rapidly evolving environment, and one that I think we might both suggest we're never going to go back. We need to be forward looking here. So we've got this aggressively changing environment. We have financial headwinds, as you've described, hitting each of those 3 internal companies sort of at the same time. We are in a position where we need to make very, very difficult strategic decisions. So in conclusion, thinking sort of about all of those areas, what financial expertise, what sort of new financial skill set does that health system chief nurse executive need to be able to be a full participant at the table with these conversations?
That's a great question, Therese. And I might spin the answer a little bit or answer the question in a slightly different manner, but I'm going to get to the critical question at hand. And I'll start by saying, when you think about that concept of portfolio assessment that we talked about earlier, and its critical relationship to the financial plan, because it determines, resource requirements, it can determine revenue and profitability potential. When you break that portfolio assessment down into some of the critical questions that you're asking, it's things along the line of, what is the mission of the organization and how well are we serving it? I'm willing to bet that most of your listeners today work in organizations where the mission relates to the care of patients in a community, right? It's some form or fashion of that. You're asking questions like, where are we seeing success and where are we having struggles? Well, there's much more to success and struggles than just the dollars and cents. There's community health, there's outcomes, there's safety, there's breadth of services and access and all these dimensions, right? Another critical question might be, where is healthcare going and what needs need to be met in our community as we look forward? What are we seeing in terms of changes in care delivery models and different capabilities and whatnot and modalities that we need to add? Every one of those questions that I just listed out for you, first and foremost, they're not questions that can be answered in the 4 walls of any single individual's office or department. They are multidisciplinary topics and questions. And very clearly, when you look across those questions, you can see the importance of the role of the chief nurse executive in answering all of those questions, whether it be from a clinical standpoint, whether it be from a workforce and delivery model standpoint, whether it be from an epidemiology and clinical outcome standpoint. That point of view is absolutely critical. And as I mentioned earlier, if we don't have everyone on the same page and we don't have sort of this clarity and consensus on that mission and how are we going to meet the community needs and what capabilities do we need to have internally in order to be a first-class organization, then we're really not probably answering the right questions in our planning exercise. And so, I would just strongly encourage those that are listening today to recognize that being an effective planner, a financial planner at that, it's not all dependent upon being a CPA. And it's not all completely dependent on whether or not you remember your T accounts from a managerial accounting class you took, however long ago. It's really about understanding there are frameworks of success going forward. We know we have to manage the performance of the organization. We know we have to generate profitability to have access to capital. We know we've got to have a strong balance sheet to mitigate risk. But all of that stuff doesn't happen magically. That all happens how we make decisions with our organizations, where we deploy our resources, how we operate the organization, how we deliver care at the side of the bed. And all of those are pieces that your listeners are acutely involved in and aware of. And so their input into how those levers stack up, the levers that we pull, the resource requirements that we need, their input is absolutely critical to that paradigm. And going back to what I said earlier, if we try to do a financial plan just in the CFO's office, we might get the dollars and cents right, but we may not even have been answering the real problems or the real challenges. And that's why it's so important to approach this from a multidisciplinary perspective.
Wonderful. Well, Dan, thank you so much. It has been a pleasure to talk with you. I am sure our listeners will find many, many nuggets of great information within your comments today. And we'd love to have you back in the future as a participant in one of our nursing economics podcasts. Thank you all. We really appreciate you listening. And the transcript from this interview will be published in the coroner office in one of our up and coming issues. Thank you so much.
The Nursing Economics podcast series is owned and produced by Genetti Publications Incorporated. All rights reserved. No portion of this podcast may be used without written permission. Mr. Dan Majka is a managing director and practice leader for financial planning at Kaufman, Hall & Associates in Chicago, Illinois. Dr. Therese Fitzpatrick is a senior vice president at Kaufman, Hall & Associates and a member of the performance improvement practice specializing in workforce strategy. She is also an assistant professor in the School of Public Health at the University of Illinois, Chicago, and is a member of the Nursing Economics Editorial Board. For archived episodes of this podcast and to learn more about nursing economics, visit the journal's website at nursingeconomics.net. You can also subscribe to the Nursing Economics podcast everywhere podcasts are found. And remember, as a listener, you can save 50% off 1- and 2-year subscriptions to Nursing Economics. Simply visit nursingeconomics.net, click subscribe, and enter promo code NECSAVE50 to take advantage of this special discount.